Malaysia's unemployment rate in April spiked to 5% as operational closures during the MCO hurt business bottom lines. This is the highest since 1989, when the annual rate hit 5.7%. According to the Department of Statistics, unemployed persons rose by 48.8% year-on-year to 778,800 in April, compared with 610,500 in March, when the jobless rate stood at 3.9%. The working population shrank by 1% year-on-year to 14.9 million people. The most affected were in the manufacturing and services sectors, namely accommodation and food and beverage, arts, entertainment and recreation, and other services such as beauty centres and salons. Meanwhile, the labour force grew marginally by 0.6% to 15.71 million persons in April, the slowest growth since September 2014. In May, Malaysia's labour market is expected to be further affected since businesses were still not fully in operation during the CMCO. The department notes that during this period, companies had the tendency to reduce headcount to cut operating costs. With the implementation of the RMCO this month, however, things should start looking up for the jobs market, especially in the travel and tourism-related industries. It was a rough day for the FBM KLCI as fears of a second wave of coronavirus infections rattled markets. The local benchmark composite fell 47.19 points or 3.05% to end the day at 1,498.83 from Friday's close of 1,546.02. The overall market breadth was negative, with losers outnumbering gainers 1,107 to 159, while 227 counters were unchanged. Trading volume was 9.07 billion shares, worth 5.32 billion ringgit. A dealer said investors turned risk-averse due to weak oil prices and fears of a COVID-19 resurgence after Beijing reported new infections in the city. On the domestic front, news of April's jobless rate also hurt sentiment. Among the heavyweights, Maybank lost 21 cent to 7 ringgit 77, Public Bank fell 38 cent to 16 ringgit 42, Petronas Chemicals declined by 40 cent to 6 ringgit 47, and Top Glove lost 1 ringgit and 70 cent to 15 ringgit 20. The KL High Court has rejected Datuk Seri Najib Razak's bid to postpone the 1MDB final audit report tampering trial that he is jointly facing with ex-1MDB President Arukanda Kandasamy. Lead Defence Counsel Tan Sri Muhammad Shafi Abdullah had argued that the trial should be put on hold until Najib's application to disqualify Datuk Sri Gopal Sri Ram as the lead prosecutor in the case is heard. The application would be supported by an affidavit by former Attorney General Tan Sri Muhammad Apandi Ali that the former judge was sent to see him in January 2018 by Tun Dr. Mahathir Mohamad to persuade him to arrest Najib, who was then Prime Minister. However, Justice Muhammad Zaini Mazlan said the trial should continue as the application should be dealt with separately. He fixed August 7th as the hearing date for the application. Today's proceedings, however, were postponed to tomorrow. This is because a member of Najib's defence team came down with a high fever and is being tested for COVID-19. Shafi said he would also take the test today as well as a precautionary measure, making it the 6th time he has taken the test. Post Malaysia says it recorded a narrower quarterly net loss in the 3 months ended March 2020 at 49.2 million ringgit from 141.1 million ringgit a year earlier, as it benefited from the stronger demand from e-commerce and online marketplaces and the new postage rates revision that was implemented in February. Quarterly revenue shrank by 6.1% to 558.5 million ringgit. Looking ahead, the group believes the revised postage rates will soften the financial impact of the decline in mail volume and increase Post Malaysia's revenue in FY 2020. The reopening of businesses, primarily bulk mail operators and higher footfall in Post Malaysia's outlets, should provide some improvement to the group's mail and retail business. Meanwhile, average daily parcel volume should continue to increase as more consumers turn to online shopping. Transshipment volume and the logistics segment look set to resume at a gradual pace. But the aviation segment's recovery is expected to take longer and will depend on the easing of travel restrictions, border control, and imposition of new rules regarding air travel. The KL High Court has fixed July 27th to hear Airasia Group's judicial review application against the R2 million penalty imposed on the airline by the Malaysian Aviation Commission or MAVCOM. Justice Datuk Nordin Hassan presided over the case mentioned today, during which MAVCOM and the Attorney General's chambers filed their objections to the carrier's leave application. In April, Airasia sought a declaration from the High Court that the penalty and decision issued by MAVCOM on December 13, 2019 was invalid and of no effect. It is also seeking further and consequential relief or directions to be made as the court deems fit. The airline claimed there was a breach of natural justice and that MAVCOM had acted in error of jurisdiction and error of fact and law. The Commission had found the airline to be in contravention of the Malaysian Aviation Consumer Protection Code 2016, alleging that it had failed to incorporate the processing fee as part of its base fare, as made mandatory by the code. It believed this failure resulted in an increase of the final price to be paid by a consumer before the purchase of a ticket. Airasia, however, does not believe it contravened the code and said the removal of the processing fee was a complex process.